Hi everyone, and welcome in for Trader Talk Radio. My name is Paul B, and I am your host tonight. Today is, 2nd of October 2022. Look, Ainslie is not able to join us today. She's feeling unwell, so I'll be doing gold and oil with a little bit of help from Ash, and then we'll be having George's recording. Gonna do a little bit of a chat with Ash at some point as well, just on this. I think we've got a topic we need to talk about, which we'll bring into this conversation as we go. Without further ado, let's bring up some charts. So I'm going to start off today talking about gold. Look, technically for mine, it's a really simple picture, and really these are both quite simple pictures. The gold chart technically is going from a high to a low, to a lower high, to a lower low, to a lower high, to a lower low, to a lower high, to a lower low. And now I know there's a bit of some small cycles in here as well, but overall for mine, lower highs and lower lows. Then what gold does beautifully is very technical, which I really like. So as an example, on the way down here, you can see this level here becomes support and pushes it up to this level here, which bounces off. This level here is previous support, becomes resistance. This level here acts as support, becomes resistance. In other words, it bounces off it, then it breaks it, and it goes the other way off it. And it does this a lot on the way down. So I like gold because I think it's good technical stuff. And you can see here, this level here, which was support, becomes resistance. And my expectation is that this level here, which was support, now broken, will become resistance. And we're in the area now. I wouldn't be surprised to see just a little pop up to touch this area. We're close enough, really, but now really, I wouldn't be surprised to have a little touch up to touch this area, and then continue for the move down. And I'll be looking for a lower down, a lower low. At least I'll be looking for a move from here down to this horizontal level here at 1610. We've been pretty close. We didn't quite touch it, but I wouldn't be surprised to see a move from here down to 1610 technically for me. Actually, anything you want to add to the gold charts technically? Or any other view on it?
Yeah, I do have a view on it, actually. I mean, there's a few things that I've been looking at recently, and it's not an indicator that I look at often, but in these extreme moves, I do tend to. And I'll show you what I've got on my chart. And I find this quite interesting. So with gold, the monthly chart, now this is a 200 period moving average, a 50 period moving average on the monthly. And it does tend to be a really good area when we look here. Look here. It's an area which is respected. You see it here, and that's what we're right on top of. We're right on top of the 50 period moving average. Same as the 200 period on the weekly. Now this is something that Swee talks about in Trading Buddies, and I put it on my chart, and I was really fascinated to see how well gold and many charts, actually, many asset classes react to these levels. The big thing for me, though, is when we look at this, that's a relatively strong weekly bar. But if we were to draw the trend line across here, this is looking like it's through. And that's a big problem. So there are indications of what we've got, that we've got a potential for a move further to the downside. There's this sort of line there. We're right the way through it. Further to the downside. But when I look at this, and this is a daily chart, and I bring up the volume, what I'm really interested in is the 90-day volume. So the quarter, what was the volume of the quarter? And if we look over here, this volume is spiking. In comparison to every other day that we've had, this volume is spiking. And the biggest volume bar is this one here. And that's on a very bullish looking bar. So even though the chart has broken down, we're through the trend line, we're still hovering around about that monthly 50 moving average. We're still hovering around the 200 weekly moving average, and we've got a daily spike of volume. Now, I've looked around through all the charts, and you'll see it on the NASDAQ, you'll see it on the S&P as well. And it's suggesting that even though we are at significant levels and potentially through, there is interest here. There is buying interest at this level. So I'm not convinced at this stage that we continue lower straight into quarter four. I wonder whether we might actually be due a bounce, and we might well even take this level back. Now, it doesn't matter because what we need to see, this would be an inverted head and shoulders, the formation of inverted head and shoulders here, suggests that it would come up here, come back, maybe not be as shallow, but eventually get through this trend line. That's where I'd be interested. I wouldn't be interested before that. So it doesn't matter that, the speculation is that we go higher. What matters is we see the correct chart pattern. And the correct chart pattern would have to get back inside the trend line, retest the trend line, having closed at least on the trend line, but not below. And then I'd be interested in the long. But my anticipation right now is for potential longs to come in. And there's no question, the dollar and the value of the dollar is incredibly dangerous. It can't stay this high. It is obliterating world economies across the board. You saw what happened with the pound. This is because the dollar is so strong that it is messing up the market structure. The intra-market structure with all these countries. If this breaks down, there's trouble. There's big trouble. And obviously the way that I'm sure Geoff would probably look at this, a low under this bar, an entry under this bar would also be of interest. So it could go in either direction effectively. We were talking about potential ways to protect yourself. Maybe putting some entries under some of these really bullish bars on high volume would be a potential way to protect yourself.
So Ash, for me, right, I'm going to say technically still short. I'm going to say that a retest here of the 200-week moving average, the 50 moving average, the trend line themselves, all an area where we would look for this market to go short. The volume profile here has you a little bit focused on the fact there's some bars around, and we might push through and put a leg up. But even with the inverted head and shoulders, we're likely to see some selling around this area of the broken trend line, of the 200-week moving average. We're likely to see some level of selling around that level, right?
I think so. Yeah, I think so. I think shorts in this area, which would be right on the neckline of the inverted head and shoulders, would be, I think, relatively sensible at this stage. That would be the area. So I'd be anticipating it to come back down here anyway. So I probably want something that did, in the end, push into the neckline area here and then come back to that point and then see if we can get through. But really, the trade for me would be here. Before that, I wouldn't be that interested, but I'd want to see the inverted head and shoulders form. I'd want to really hear what they are going, what would be the catalyst. At this stage, there's no catalyst. If you look at what happened last week, we had PCE inflation data from the United States. Terrible. What I think is quite interesting, though, is that CPI is also made up by oil and the cost of oil. And yet we've seen the price of oil coming down. We're
going to talk about oil next, Ash. Look, we'll have a look at oil. We'll have a look at oil next. I find it hard to say to people that this is a buy.
Yeah.
I think you've got to see quite a lot of evidence before you make this a buy for mine. And the retest off the level and hitting short, I still favour personally. So there's a couple of areas for you. You've got the retest, the break and retest flash long, and just the retest of the area and the push short. For me, either one I think is a place where you can trade with proper stop losses and proper risk management. One thing we are looking for possibly is some quite. There's the potential for some real volatility. I want to ask you a question before we move on. Right, Julian often talks about the shortage of US dollars, and what he says is that basically the price of commodities has gone up so much that you need US dollars to buy them, and all the US dollars is being used to buy those. There's not much US dollars for anything else. Hence the shortage of US dollars. Hence the price of US dollars. I understand the US dollar value is, it's one of the things, right? People talk about the New Zealand dollar being smashed, the pound being smashed, but we're all only being smashed against the US dollar. Against everything else, where we normally are. This is just the US dollar. You say it's unsustainable. It's sustainable for a little while, isn't it?
I don't know, mate. Honestly, I really don't know. I mean, we're not just talking about the major economies here. We're talking about some of the smaller economies as well, effectively coming out, and they are struggling to repay some of those loans that they took out in US dollars. So we've got economies really on the brink. So I don't know is the answer to that. And I would probably edge on the side of that we've got to be relatively close to it being.
Let me ask you a question.
It's already dangerous.
If you buy it in US dollars and you've got to pay it back in US dollars, do you have to buy US dollars to do that?
Yeah, you'd have to convert back to the US dollar. So and we're talking about
part of the problem is them buying US dollars to pay off the debt.
Yeah, with the yields, and we've seen what's happened with the yields, right? So the debt is going higher and higher and higher, whereas before they were relatively comfortable because the US dollar Fed rate was at zero, pretty much at zero for a long time, and now it's kind of pushing up to those near 4%. It won't be long before it's at 4%. And that is a huge problem for the globe, huge problem. And it's not so much that the dollar is a good currency. And this is the thing, if you're bullish, then you do not want to see the dollar going as high as it is. If you're bullish on the market, the dollar where it is incredibly damaging to the market. Even the Chinese, when you sort of you look at what they've been doing to try and rebalance, I think they're at 7% spread or something between the US dollar value and their own value. So, and we're talking about an exporting country where you would think that this would be quite good for them, but it's not. It's so complicated and so complex that when you see a currency at an extreme, and particularly the US dollar, that throughout the globe there are issues, and it really could break some economies. And when we're not India. One of them.
When you say that, be careful, right? Borrowing a truckload of money could break these economies.
Well, yeah, but also they've got debts to pay. And as you quite rightly say, they've got to purchase certain things in US dollars. So even that in itself, that they are. It's going to cost. The UK is in a terrible place. Really dangerous place.
You mean close to France or something else?
Because we're close to France.
Sorry,
it's in trouble, mate.
I don't want to jump in too much. The UK is in trouble, Ash, and now's the time where we'll start and see whether the Chancellor of the Exchequer or the Minister of Finance, as we call him around the rest of the world. I don't know why you guys have got the flash name for him. We're going to see whether monetary policy in the next year can deal with this stuff or not, right? Because the pound is in a mess. And again. Honestly, one of the most predictable, ridiculous situations in the world, right? Thanks for voting me in. Here's $50 trillion worth of tax cuts. Oopsie.
Yeah.
It's not a great look. And democracy has a bit of this stuff go on from time to time. And, it doesn't, and the market looks at it and just goes, well, that's a sham. The market hates it. It looks and goes, this is not economics. This is paying off people who put you into power in a non-corrupt way. I'm not suggesting that it's like bribery, but it's you put me in. Here's a huge reward. Here's a big tax cut for the rich people, and the market looks at it and goes, actually, that doesn't look okay. And then it just goes, oh, we're out of here. We don't have money in this country anymore. And the amount of money that left the pound and left the UK. And I just said we shouldn't get into this. Let's not get into this. Let's have a look at the UK. Let's have a look at the oil chart first, Ash. I'd like to have a look at that. Okay.
Yeah, sure.
I'll bring it up, mate. I've got one ready to go. Let's. I think one of the things with both of these things, for mine, you can see on my chart here, I've got a monthly pivot and I've got a horizontal level. And look, both these pairs, both gold and oil, are quite big on bouncing off these horizontal levels. You see, they're very interactive overall against these levels. Perhaps a couple of levels that could be added into this area, but a lot of interest from them. Again, with oil, this very similar picture to gold for mine. Running down from a bit later, 10th of June, the starts on oil. It did have another crack at getting towards the tops, failed, and then put in, again, lower highs and lower lows all the way down. And that means it technically, for me, again, is short. And we've seen another example here where it's come off this level here and come straight back to this level. So what held it here, it's bouncing off short. What held it up here is pushing it down here. And technically for mine, that makes it short. We have seen this thing here again, held it here, pushed it down from there. These pairs, oil and gold, both do a fair bit of this stuff where the horizontal levels are perhaps more powerful, or not more powerful, but they're into play perhaps more with a product versus the US dollar than with a currency versus the US dollar. They're stronger for mine than, for instance, oil and gold. So for me, still bearish on this. And again, this level's been tested for mine. So really, I'm looking for a play down from here. down 2 holes onto levels a little bit below this. Could easily see price coming down and testing around this level here. Oops, sorry. Around here, around the $76 mark, somewhere around there, 76.40. We'll see. I think that's a potential place to come in. Now, when I've got my levels wrong there, sorry. When I've said that, one of the things for mine that we need to bear into mind here is that, anything energy-wise is got the potential for some real volatility for mine as long as the Ukraine situation continues. Any thoughts on the direction on oil, Ash?
I think it's going up, and in a lot of ways, it kind of leads on to the conversation of the dollar, because we can't forget the dollar's function as the reserve currency. I mean, that's the really interesting thing here. So everybody is going to be interacting with the dollar, and because of the situation that we've got geopolitically, oil still seems to me like a screaming buy. It seems to me like that there are too many issues out there and too many potential scenarios where the supply can get constrained, that would suggest that we should be buying up oil, except for the crushing of global economies, because obviously recession means that you don't grow quite as much, and if you don't grow quite as much, then you don't get the commodity bounce. But I think that there's just too many hangover situations still going on. The situation in Ukraine is still there. If the dollar does reverse, which it will, we don't know when, we don't know what will make it reverse, but it will, because things don't go up in a straight line. Then oil will probably be one of those things that will go in the opposite direction. But just as we've seen with gold, it's very difficult to make the bullish case at this particular stage. I think if we're talking longer term, I think oil's a screaming buy. If we're talking about immediately, then you'd have to say, if you're in a trade short, you'd want to stick in there. There's nothing that is suggesting that we're turning around right now.
Let me ask you a question, Ash. What's caused this so all at 124, a lot of talk about going to $200, right? And to be honest, if you ask me where we're going to be in 2 years from now, we're going to be at $200. I'm more than comfortable with that, right? I think it's very much on track. What's caused this drop in the price of oil?
I think the concern about recession really started to kick in. I don't know what date have you got there? Is that May?
About 10th of June.
10th of June. So yeah, I mean, if you were to kind of like bring up something like the S&P, the 10th of June, it was kind of already sort of like starting to come down. So global kind of economies were already starting to suggest that we're getting this weakening position, and the probable recession. So because of that, and also because of so far OPEC Plus and the likes not really coming out and saying that we are going to be getting a restraint of supply, then it kind of makes sense that we would start to see the oil market come down. We also saw Iran come back into the picture as well. There was I don't know if it would coincide exactly with that particular point, but it's got to be relatively
close, isn't it?
Yeah, pretty close to that date. So really, if it in simple terms, it's supply and demand, and I think the demand is for oil is speculated to come down. And because there may well also be an extra player in to provide some supply, then it kind of makes sense that the oil market is starting to dip here.
Mate, I think one of the things with both gold and oil, right? I can't disagree with the long-term prognosis. I think they're both good buys long-term. Yeah. But as a trader short-term right now, I'm still looking for shorts or holding shorts in them both until I get a reason. Until one of the reasons that the price has started to go down changes. The primary reason for that would be a reverse on the US dollar.
Yeah,
the US dollar starts coming back, and I'm all over these things, right? That is just a different game. But we have to see that. We can't speculate that.
No.
So interesting times for you guys if you're watching this and looking for directions and decisions. I think I talked at the trading retreat in Singapore in May about the reverse correlation between the US dollar index and everything else we were looking at, and how important it was. And to understand that the price of everything wasn't wasn't just falling, but the currency you were buying in it was going up, which was making it even harder. So for mine, we need to see a reason for the US dollar to fall. And as you say, Ash, one of the things that you say it's over, but interest rates in the US are going to continue climbing, and money's coming out of economies that aren't very strong, like the UK, and it's going to places like the US where interest rates are climbing. And if that happened, I don't know if that's the end of the US dollar.
Yeah, I think if you were to if you were to put up a chart of interest rates and the direction of the US dollar, there's less correlation than you'd imagine. And this kind of tells us that there is something else going on here. There's something else at work here. Yes, those interest rates that, the correlation right now is the US dollar's going up as interest rates are going up, but so is everywhere else. We got New Zealand. They started way before the United States, and yet that currency against the US dollar is tanking. We got the ECB now moving. The United Kingdom is behind the curve, which is why we've probably seen a lot of the problems there. But really, it's probably more down to the fiscal situation in the United Kingdom. But there's something else at work, and I think that this is where we then can start saying the damage that the US dollar's climb is going to cause means that in the end, everybody gets hurt, and this is unsustainable. Now, I agree, it's not yet. We can't say that this is coming down yet, but this is going to hurt, and it is already started to hurt. So the reversal will come.
One thing we can agree on, right, is that it's going to come down at some stage, and it's not ideal. And the one thing about it, just for the conspiracy theorists out there, I noticed, recently, I don't want to get into the politics of it, but when the Nord Stream thing blew up, it just seems that everybody jumped on their political bandwagon, and if you're a pro, Russia, you said America did it. If you're pro America, you said Russia did it. And there's no evidence that anyone, And I don't think we should. This isn't a conspiracy theory. This is not America trying to price their currency. This has got America's not manipulating the price of their currency up. And in fact, in my view, in the big picture in the world we're in right now, they're losing the currency war.
Agreed.
Really, you want your currency reasonably low at this point, so that imports are expensive for you and exports are cheap for you. And I don't think America's in a great place from that point of view. But I'm just not sure that I can identify what it is that's driven this that's going to change. And I don't know why I think it's going to change until I can find something that I think is going to change. The price direction won't change until something that's driving it changes. I don't know what that is. Look, I want to listen to Dr. George's video on the US dollar, actually, which will be fantastic. But before I do, you and I are going to have a quick chat for traders out there. What I'm about to say is just purely an opinion, and I don't think should take it any more seriously than that. But it's my opinion that we are now odds on to see a controlled nuclear blast in Ukraine. I don't, and again, controlled nuclear blast, not a full-scale nuclear war. But I just think the way things are going, I think that as traders we have to be aware that is probably going from a 10% possibility to a 30-35% possibility, maybe more than that in my mind. And we were talking a little bit earlier about how you prepare for that. We were talking about, potentially long wheat, short NASDAQ, as a sort of hedge position. Any more on that, Ash? If these guys are watching this, the first thing they've got to do more than anything else, guys, you've got to understand this, right, is that if there was and let's just call it a disaster. If there was a disaster in the Ukraine, a disaster, spreads on products would widen out very, very quickly. Yeah. And you need to be very conscious of having stop losses. You could be your account can be wiped out in either direction. If you're anywhere near margin, you're probably done. So, but if you survive it, you'll have real volatility, and I think you'll have volatility like we saw the Swissy move when the Reserve Bank came out. Other than that, I don't think we've seen volatility like we might see if there was this kind of issue in Ukraine. How do we prepare for it?
I think you're right, mate. I think that the main word is stop loss, because if you don't put your protection in place, you're in big, big trouble. Where there might well have been some argument before for kind of, if you're not really a leverage trader, which I'm not, then you could certainly sort of like start to come into the market and use your account as your protection, if you like. But I don't think you could do that in this scenario. I think you're absolutely right. Spreads would widen out to the point that it would become just impossible to pick direction. What you will not want to do is trade at that very moment. but you might be stuck in a trade. So you want to make sure that you've got your protection in place. If your protection's in place, you can get out, wait for the dust to settle, and then get back in again. But I want to make sure that if anything like that was to happen, I was out. No sort of like risk of being taken in one way or the other. I'd want to make sure. Well, if I'm in, that's because it's just so happened that it hasn't hit the stop or whatever. But otherwise, I want to make sure that the stop, if that's one place that I would want to make sure that the stop does its job. I think you've got to have them in.
I remember a few years ago, Ash, a trader that we knew was automated system was going pretty well, pushed the risk up, and overnight the pound got smashed, and they blew up theirs and a number of investor accounts. And one of the things for this kind of situation is that there's huge rewards available if this happened, but there's huge risk, and the people who will make the money from it will be the people at low risk. You get exposed on risk here. You start to push your account risk up here, and you'll get blown out. You'll get margin called. You just won't be able to have enough margin left in your account for this kind of event. So first thing is keep your risk really low. Possible longs, wheat, oil, gold.
I think
what about Bitcoin?
Wheat is the most obvious. And wheat is obvious anyway because of the situation and what we've kind of got going on. Things like natural gas would be an obvious long as well. If oil goes long, the FTSE starts to look interesting, and that would be one way that you could hedge out the risk. You could go long FTSE, you could go short NASDAQ. Now, the reason for that is that you have got a index which is more correlated to oil because of BP and Shell, two of the biggest companies in the FTSE 100. The NASDAQ doesn't have any of that. The NASDAQ really is kind of really sort of dependent on lots and lots of liquidity, lots and lots of support from monetary policy. So you could actually go long FTSE, short NASDAQ in a scenario like that. Where you've got to be careful is that if you get the flip wrong, the FTSE will go up by 1% while the NASDAQ goes up by 2%. So you've got to make sure that you do the correct mathematical equation between what you are buying and what you are selling. It probably wouldn't be 1-to-1.
No, and again, small risk on both, right? You've got to be small risk on both.
Yeah.
What you're doing. And that's one of the things, right? That one of the good things about FTSE NASDAQ, it's quite possible that even the FTSE with the oil base will crash after this if this happened, right? But most likely the NASDAQ would go further and quicker.
Undoubtedly.
So you're long on the FTSE would lose a bit of money, but you're short on the NASDAQ. One thing you need to work out as a trader, it's quite complicated. You need to find your auto stops on the exchanges, because if the NASDAQ's got a 6% auto stop, you probably want to target at about 5.5% take profit, or you're going to sit through a day, because the NASDAQ will be auto stopped like that. If this happened, 10 seconds later, the NASDAQ will be at 6% down and be closed for the day.
Yeah,
it'll reopen the next day, and who knows? This is we've probably got to get an advanced economist in here to talk this stuff through, not too far away. But these are the places where, again, I want to make this really clear. If you're an amateur trader, if you're trading less than maybe 10 mil, I would suggest to you that you need to be at very, very tight risk for the next couple of months while this gets sorted out. You'll wake up in a day and it'll just the whole lot be gone. And someone will make a bit of money, but a lot of people, this is the rule of these things, right? 10% of people will make a shitload of money and 90% will lose the lot. So be very, very careful. Bitcoin, Ash, do you think we'll see a run into crypto?
No, I think the Bitcoin will tank. I think that'll be potentially all over for cryptocurrencies, because if we think about what and it's back to the discussion about the US dollar. The US dollar's one of the primary functions is the reserve aspect of it. I think when Bitcoin was invented, the idea was that could be a potential replacement for the US dollar. That's not really happening, and I think if you're in a situation where you have got panic across the globe, people are not going to want to go to things that are quite as speculative. I think Bitcoin will be in terrible trouble. If potentially could be, as I say, it could be all over.
Look, we don't trade it, but if something like that happened, if you can get some of the Ukrainian currency, you'd expect to see a that'll spike for the first 2 or 3 days after that while people get money home. You'll see panic, and that's one of the things. You'll see a redistribution of money when people who've got money offshore will get money home, because at the end of the day, you can't spend money in a bank account overseas. You need to get dollars into your bank account and cash into your hand. If you think that if this thing happens, the first thing people do is go to the money machine and they'll take out a truckload of cash. So we will see huge flows of money around the world. And look, to be honest, we will see chaos. And look, the first 24 hours afterwards, when we wait to see what kind of response there's going to be, there'll be terror on the planet. My belief is that if we had a controlled nuclear response from Russia and Ukraine, that we wouldn't start a nuclear war. But boy, oh boy, there'd be some repercussions, and there'd be some moves around the world. And while we waited for that to become clear, we would be way, way closer to that kind of disaster than you ever want to be. And there'll be some genuine panic around the world. There really will. Watch out for, in the world we live in, if that does happen, then watch out for a huge amount of misinformation on social media in the next 24, 48 hours. Everyone's blaming everybody. People are talking about this is going to happen, that's going to happen, this is going to, just turn your social media off for 2 days if that happens, because it's going to be carnage for people out there. Let's hope it doesn't. Let's hope that somewhere along the line there's a solution which is good for human life. Right, Ash, anything else on this before we go to Dr. George's recording?
No, mate, no, not really. I mean, it's interesting. I was talking to Molly this morning about, she was asking me if there's still conflict in Ukraine, and I did say to her that there was. And I said that the unfortunate aspect is that nobody right now is prepared to listen, and nobody's prepared to talk. So it does seem right now that we could be going towards something. There's no movement, is there?
No, I think it's one of those things, Ash, that again, but one of the things we shouldn't be doing as traders is getting involved in good and bad and who's right and who's wrong. That's a private conversation. That's not a public conversation. That's not a conversation for shows like this. Everyone's got their opinion on it, and no one's going to change. It's like COVID vaccines, right? No one's going to change their mind. If you're pro-Russia, you're pro-Russia. If you're pro-US, NATO, Ukraine, you're pro those. You're not going to change your mind. But there is a need. The planet needs a peaceful solution, and it's one of the things. The US dollar is causing carnage at the moment. A situation like that could put the US dollar up considerably from where it is.
Yeah.
And boy, oh boy, that how the system survives after that. We may be heading for. We've got these anarchists who've always talked about the collapse of systems, and I've never been a real believer, but the system we put on some real pressure. And particularly, of all the times in the world, the time you don't want to do this is straight after a global pandemic. We've just printed a truckload of money. You've got nothing left for stimulus, right? What do they do after this? The US dollar goes off. Look, it might not matter how much money you make in your trade. Ash, you're running away.
Sorry, I've got to make sure that I don't run out of juice. My laptop's flashing. Do you know what? This is a lovely laptop, but my goodness me, does it use a lot of power? If I'm not on the plug, it takes an hour and it's gone.
Mate, probably be banned in the UK pretty soon. Anything that takes power like that.
Probably should be.
Okay, mate. Look, thanks, guys. Thanks, Ash. Really appreciate it. Hope you guys at home have got some value out of this. That's a good question. Someone Crystal Swiss. Oh, Gregor, if that happens in Europe, hard to see a European currency benefiting from it for mine. Would money go to the Swissie as a safe haven? I just don't know if you can call the Swissie a safe haven in that circumstance. Really the chief protagonist in this world, when this situation would be Russia with the Ukraine, with the support of NATO, and that includes Europe. And, I don't know if Europe itself could go up in that situation. A little bit, again, all around the world. I think what you will see is money, safe haven money in Switzerland will be moved home by people who want cash. Literally, if I really thought this was going to happen, the first thing I'd do is bring a truckload of money home, put it in the safe in the house. So if the world gets messy, I've got a truckload of cash. And to be honest, what currency would you buy? If you could have any currency in your safe in the world, Ash, what would you have?
Well, you got to have the dollar. If you're going to sort of buy anything.
Boy, there's no good news really here. This whole scenario plays out dollar strong for mine, which hopefully there'll be a breakthrough. And it's easy for people like us to talk about these things, but there are families in Russia and Ukraine that are losing family members every day, and their patience with us may, in the end, bring some solution from one side or the other. Neither side's winning. They're both, no one wins. All that happens is people die. Cheers, Ash. Really appreciate it. Anything else from you before I go?
No, that's all good. I probably would agree with Greg personally. I think the Swissy probably would be a viable option, purely because of the lack of connection. If you were to compare the Swissy to the Euro as an example, Switzerland's a lot more protected.
Interesting. We will wait and hopefully never find out, eh? Cheers. Thanks, Ash. Look, we are going to go now to Dr. George's. We're going to go to Dr. George's. We're going to go to Dr. George's recording on the US dollar. This will be fascinating. Sam, can you drop a message and let me know how long it is, just so I can tell people as we go? 10 minutes. There we go. 10 minutes on Dr. George. 10 minutes on the US dollars with Dr. George, and I'll be back.
Good day, traders. My name is George, the craftsman trader, and I present to you live trading profits every Wednesday, as well as Wednesdays at the Market with George, the second Wednesday of every month. Now, for this beginning of the month presentation, I thought I'll just look at one particular chart, S&P 500, and you could use the information I'm sharing to look at the other charts. The primary message I want to get across is that measured moves indicate for us what is likely to happen in the market. The higher probability event to happen should price action break through a level of support or resistance. Now, there's almost close to 90 live trading profits recordings in our archives at ATW. So suggests that you have a look at them, because virtually in every single one I have pointed out measured moves. Now, here's the power of measured moves. Let's just start here. This is December 2021. At that point, we spoke of a measured move within here. Whenever you see a trading range of sorts, you always need to put a measured move. So before the market got down here, you would have said, I've got a low, I've got a high. If we break beneath here, market is likely to go for a measured move. And we got to the measured move. So if you are selling, that's where you ought to be taking profits. Now, remember, markets are fractals. So whatever patterns you see on this daily time frame, they repeat themselves daily on the 5-minute, on the hourly, etc. So same principles. Then the market came through here, and even if you were in here and this market was turning here, this pullback, it said, hang on a second, I've got a high, I've got a low. If the bears break beneath here, where are they likely to go? They're likely to go for a measured move. And when you see that huge candle on the day and there is buying back and then creating a reversal candle, don't be surprised. So if you trade in 5-minute like I do, and I have a measured move coming in sight, if I get up and I start to trade and the market is selling off, I'm going to sell off gladly. But when my measured move starts to come into view and the market turns, I get out and I look for reversal patterns. I just buy on the day. All happens in the same kind of day. So when you had this and you had this double bottom here, you say to yourself, hang on a second. If measured moves are powerful, if the bears do break beneath this level or this level, where do they want to go? What is a high probability event? Well, this bigger trading range, that's where they want to go. And we've just gotten there, almost got there in June, but with this double bottom we did. And have a look here. If the market broke down beneath here, at some point, leave your measured moves in on the daily, don't take them off. And eventually broke out beneath that low, and we got to the measured move. What precision. Then we had this pullback here. And I remember talking about this and still saying, we are in a bear market. And that bullish price action was really just a pullback to create a lower high double top. So at that point, when the market started selling off, you kind of ask yourself, well, we have this low, we have this high. If the bears break out beneath here, how far are they likely to go? Measured move, and we got there. Could have done that with the trading range in here, high, low. You'd have found that we get to there. even this little trading range here, when you see those kind of things, let's just plunk it in quickly. There is a low, there is the high, and we got there. All this is profit taken within the measured move. So you can sell off, and when the market starts to turn, jump in and buy, especially as 5-minute traders. We just buy in a bear trend, but we buy in a pullback. Then, you could do the same here with this little trading range, but distinct low, distinct high. And you kind of say to yourself, when the market is selling off here and you're selling, if we break out beneath here, how far do the bears want to go? Now, this is quite interesting. There is a measured move, and this suggests for us that the bears are not entirely satisfied. If you're a bear trading the daily chart and you took a trade here, you're going to put your stop up here and then just wait for to get your measured move. So even if you did that, or if you took profits at any particular point, then you just initiate your shorts again. Let's look at this. Time is not on my side. Look at this trading range here. Low of June, double bottom with September. So you got to ask yourself, if the bears manage to break out beneath this present low, where do they want to go? You got to put in the measured moves, and the measured move tells you that's where the bears want to go. I mean, that's in the 2870 range for 500. The bad news, if you are a bull, is that the higher probability event that's going to take place is that there is more selling still to come. All the bears need to do is break out beneath this double bottom, create a pullback, and then that's where they want to go. And bears who have sold here, and they are holding on to the shorts with a stop up here. If we break beneath here, they put the stop down. They want to get to that measured move. Another measured move here, and this took place just in this past month. September has been a great month for me, in any case, as a price action trader, just using this as one of the things in my basket. Low, high, measured move, bang. That's exactly the measured move. So you will not have been surprised with that. Now, what is this level here? This is a key magnet that's going to pull the market down. That's going to be heavily defended by the bulls. Bulls, I want to turn the market here. Why would they want to do that? This level here, as I've indicated, is the low of September 2020, but there's a double bottom that the market created right there. And this is going to be interesting. So that's the level I'm talking about. That's the measured move where I'm saying if you break out beneath this trading range, that's where the market wants to go. Now, why is this double bottom here important? Because, when we were here in February 2020, that at that time was the all-time high for this market in the 3334 area. That was the all-time high for the S&P 500, at least on the price feed that I'm getting from my broker. Then we had this low from March 2020, that's the COVID low. And if you were trading this market and buying, and you were a bull, you'd say, hang on a second, I'm going to buy here, I'm going to hold my stop down here, and I'm going to hope that if we break above this previous all-time high, we're going to go for a measured move, which is this red line here. And the market got to the measured move, 18 months later, or probably, within that range. The market got to that measured move. When the market broke out above that all-time high, humongous, for lack of a better word, fight at this level. The bears didn't want the market to get above the all-time high, so they kept on pushing back the bulls. The bulls wanted, of course, to get above it. So we went sideways, created a double bottom, created a double top, a trading range, breakout mode. Eventually, the bulls broke out above this, and they went through, even though there were pullbacks along the way, they got through to their measured move in this area. Now, have a look at this measured move. This is the all-time high now on this particular chart. And this level here, okay, is the low of 2022, which is also, so the low of 2022 here in September, it is also the double top area in this area where the trading range. Okay, so that's, I've kind of indicated that for us. Low of 2022 is also now, because the price is coming down, the support of this double top. And so you can expect that there is going to be quite significant price action here. Bears want to break out, bulls want to stop that. So it wouldn't surprise us if we have a double top, double bottom. This area that might last for us, a couple of months, might even take us to the end of the year, who knows? But the objective is trading range price action, maybe, but the bears want to get initially, they'll get to this level. If they break out beneath September, they'll get to this level quite easily. Then they want to break out beneath here and get to the measured move of this trading range. But the ultimate goal is this, okay? At this level that we're at, we have an all-time high and we have the low of 2022 and also the breakout point, from the all-time high that we spoke about here. The bears can see that. They're saying if we can break beneath this, our measured move is to go all the way down to the 2376 area. Then we just test that COVID breakdown. So just to wrap it up, measured moves are highly predictive of where the market is going to go. Use them on any time frame. But what this is telling us that there's a higher probability that the bad news is not over. There is more selling, there's more crashes, whatever you may call it, to get down to that measured move. That low of March 2020, the COVID low is going to be tested at some time. How long it took, we don't know. It took us, almost 2.5 years to get this high. It may take us as long to get down here, but that's where the market is likely to go. Thank you, guys. Name is George, your craftsman trader. We will catch up with you in one of my shows. Bye-bye.
So there it is again, George talking about measured moves, and again quite a bearish or downward kind of bias, feeling that there's stronger probability as the move down and still quite a large move down to come in the opinion of George. Look, thanks for joining us today. We'll have the sessions cut up. You'll see oil, gold, and perhaps that little bit from Ash and myself on the Ukraine situation cut up separately and put onto social media, particularly YouTube, if you guys want to come back and have a look at it later. For those of you that joined us live today, great to see you guys. Can see a few very familiar names. Looking forward to seeing many of you that are watching today in Bali. And what's that now? Less than 2 months we'll be in Bali. Looking forward to that very much. And thank you for joining us today. Sorry that Ainsley couldn't join us for gold and oil. Thanks to Ash for coming in and helping out, and to George for doing his bit. Sam for hosting it for us. We will see you all next Sunday.